Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 13th of January. Fed Chair Yellen maintains an upbeat tone on the economy. Speaking to teachers in Washington, D.C. yesterday, Fed Chief Janet Yellen retained her overall upbeat tone with regards to the short-term economic outlook. She indicated that the economy is doing quite well, though she's worried about longer-term problems such as widening income inequality and lackluster productivity growth. She appeared even more optimistic on the labor market, indicating that the unemployment rate has reached a low level and that wage growth is starting to pick up. On inflation, the Fed chair said that it has moved up from a very low level and it is now pretty close to the 2% objective. Overall, these comments are relatively more hawkish than what we are used to from Chair Yellen and amplify somewhat the scenario that the Fed may raise borrowing costs 3 times this year, as indicated by the December dot plot. As such, the dollar came under renewed buying interest while she was speaking, recovering some of its losses triggered by Trump's press conference on Wednesday. Euro-dollar edged south after it hit resistance at 106.85. The pair is still trading within the upside channel that has been containing the price action since the 3rd of January, but for now we see the likelihood for yesterday's retreat to continue for a while. Decisive break below the 106 level would confirm that case and is possible to open the way for another test near the 105 territory. Even though the Fed chief's upbeat stance was consistent with the possibility of 3 rate hikes this year, we will maintain the view that, as things currently stand, the FOMC may deliver 2, not 3 hikes in the year. We believe that the combination of a more dovish committee this year in terms of voting rights, as well as the officials' concerns with regards to excessive USD strength may be factors that deter the FOMC from implementing the 3 hikes it penciled in. This view is also supported by market pricing, which currently points to roughly 2 rate hikes in 2017, according to the Fed Fund futures. Just to clarify, we are not calling for a major reversal in the dollar. In the short term, yes, further downside correction in the greenback is possible, given the absence of any clarity regarding Trump's fiscal measures, but more broadly speaking, we still expect the currency to perform better than most of its G10 peers over the year, supported by the prospects of increased fiscal stimulus and high tariffs, as well as the dynamics of monetary policy divergence. Thus, our argument is simply that the pace of the currency's future appreciation may be much more gradual than what was the case following the US election. Indeed, on the daily chart of Eurodollar, the price structure has been lower peaks and lower troughs since the 9th of November, which enhances our view to treat the recent recovery of the pair as a corrective phase. As for today, during the European morning, we have a very light economic calendar with no major market-moving events or data due to be released. From the US, we get retail sales for December. The forecast is for both the headline and core rates to have risen notably. Indeed, both the University of Michigan and Conference Board consumer sentiment indices rose in December, enhancing the case for accelerating retail sales. In fact, the Conference Board Index increased to its highest level since August 2001, so combined with the prospect of holiday season shopping boosting spending in monthly terms, these factors support the forecast for a month of robust retail sales, something that could cause the dollar to extend its Yellen-related gains. Dollar yen is currently trading slightly below the 115.40 resistance, so a strong retail sales print could encourage the bulls to overcome that hurdle and aim for a test near the crossroad of the 116.50 line and the short-term downtrend line taken from the peak of the 3rd of January. Nevertheless, as long as the rate is still trading below that downtrend line, we believe that the short-term outlook remains negative. Zooming out to the daily chart, we still see a cautiously positive medium-term picture. As such, we believe that the short-term downtrend identified on the 4-hour chart is still a corrective phase of a longer-term uptrend. We have only one speaker scheduled for today, Philadelphia Fed President Patrick Harker. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.